so that there is no further deterioration in the health of the client. Then country risk. When we are doing business, foreign exchange business, we have to deal with different countries. There are so many countries which are medium risk countries, classified as medium risk countries, high risk countries. So when we take exposure on them, we have to be very careful. So for that, we follow the Export Trade Guarantee Corporation of India. There is an organization. It is a unit of Ministry of Commerce. They are giving the export credit insurance. Whenever we give export credit, they give the insurance to the exporters and also the banks. Whatever money we give against exports, they insure against us, against any default. Accordingly, our credit is protected. So they are classifying the various countries in the world depending upon the political stability, economic stability of the country, and also their capacity to remit the foreign exchange. It's called the problem of externalization. Even though local currency may be there, they may not be in a position to remit the foreign exchange. For example, Nigeria, countries like Nigeria. So for this country risk, we always monitor it on a weekly basis. But due to subprime crisis, we all must have heard about it some time back. When we keep, our bank, all Indian banks, we open account as foreign bank to facilitate the foreign exchange transactions. But during subprime crisis, when many banks were failing in US, we thought, we opened account with our own banks. For example, State Bank of India, Bank of Baroda, they all have branches in New York. We opened account with them and our monies are deposited there for facilitating the transactions of the customers. So it is also a sort of risk mitigation. So that there is no question of any Indian bank failing, because after all it is our own bank and all are owned by Government of India. Major stake is Government of India. So this is sort of risk mitigation we did during that time. Now also there is a threat of many US banks failing. But at the same time, we have to keep the accounts with many of the US banks and European banks for facilitating the transactions. So, but at the same time, we are monitoring it on a daily basis. So, take corrective actions so that our exposure on those banks is kept at the minimum. Then you will be wondering, in all the transactions taking place in the bank, all the meetings taking place, as I told you in one of my previous slides, there is a committee called Credit Risk Management Committee and Asset Liability Management Committee and Operational Risk Management Committee. All these minutes are put up to the Board of Directors, and also a statement is sent to Reserve Bank of India on a quarterly basis, and on a half-yearly basis there is one risk profile template which consists of about 120 pages to Reserve Bank of India that gives the entire picture of the bank. It is just like a pathology report of a human being. Entire scan, body scan like that, the whole report is submitted to Reserve Bank of India. Reserve Bank is monitoring very closely the performance of the bank and the health of the bank through this risk profile template. This is a standard procedure for all banks. Then coming to the operational risk, as I told you, this is assuming more and more important because the banks are going for new business lines. See, earlier you will not have seen so many products. ATMs are not there. Today, even the ATMs are being lifted. There was a case in Pune, even an ATM was lifted by somebody. And there are, in some parts of the country, the people are not fooled so easily. When you put it was not an ATM, it was a fake ATM. If you insert a card, the card was swallowed, then the card, there was a computer inside, and it took all the details of the card, and the card did not come out. The customer did not realize that it was a fake ATM, and all the cards at the end of the day were collected and misused by miscreants. Even such things have happened. So, when technology is changing, new technologies are introduced, new products are introduced, there are going to be a lot of frauds. That is why this operational risk is very important. And in one of the banks, I hope you must have read in the papers also. One computer operator, what he did, when we transfer interest on savings bank account at the end of every, now it is monthly interest, earlier once in a half year we are doing it. He will debit, say, the whole, for all the accounts put together, it comes to say about 100 crores interest for that particular half year. He used to transfer 1 paisa only from each account to this account. So 1 paisa, nobody bothers about it. But in this process, he earned a few lakhs of rupees. See the point here is, the staff also at the branches, if he can misuse the facility, he can do the fraud. So that is why the operational risk is defined by the Basel Committee of Banking Supervision, for which all the countries in the world are signatories. They have defined the risk of loss resulting from inadequate or failed internal process, people and systems, or from external events. Very beautiful definition. So that way, internal people also, we have a constant check on all these systems and procedures. When somebody commits a fraud somewhere, immediately we have a committee, we sit and discuss where was the fault. Then we choke that rule and change the systems and procedures. So that way we are choking this rule for operation risk. But again, something else will be found out. Then turnover and rotation. In banks, we have a practice that we rotate the staff working in the same department. We don't allow him to work. We change him after, say, 6 months or 1 year, so that he doesn't become very close to some clients. At the same time, he doesn't commit some frauds and conceals it. Suppose if I take over some other seat, I will find out if any mistake is there. So that is why this rotation is very important. Rotation of job in the banks. For that matter, in every organization, this kind of practice should be there. Then, transaction risk, errors in executing the transactions, sometimes wrong postings. Nowadays, even though account numbers are there as identification, names are similar names. There are possibilities that wrongly the amount is created to some other account. So transaction errors, in which case the loss has to be borne by the bank unless we are able to recover it from the person to whom we are wrongly related. So similarly, documentation mistakes. If there are, we banks also sometimes lose cases where our documentation is defective or our mortgage is defective. Sometimes we also, in Pune also it has happened, we have given housing loans. All banks have been involved in this. Same document, it has been colored very beautifully. He has made photocopies, color photocopies. Even police could not verify that, which is genuine, which is fake. Even police could not, forensic experts also could not trace it. So beautifully they made. They have given the same documents to different banks, availed loans. Against single house, some 10-15 loans have been taken. This is a very common thing happening across the country. So these are all, but again, now there are some systems have come. Some softwares are available which can detect such things also. That is why this is a continuous ongoing process. If somebody is inventing some fraud, we are inventing some methods to check it. So this is an ongoing process. This is a battle of wits. It will continue. So here the point I wanted to make is the operational risk is assuming greater importance because of the technology development. Then again, technology risk, system failure, MIS risk, wrong reporting of the MIS, that also creates wrong decisions, and this is a risk. Again, legal and regulatory risk, this is also non-compliance with certain laws, also operational risk. For example, you must have seen some of the banks have been penalized by Reserve Bank for violating some of the guidelines in recovery of loans by employing some gundas if they recover the loans. Then it is against law, so for that the banks have been penalized. Then again, taxation. If I open an account for by without knowledge, if I open account for a wrong person and I have allowed money laundering from some other country, again the bank also will be put into trouble.